Welcome to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be here.
You know, this week feels like a real mix of things happening in tech and the economy.
Definitely. Lots of moving parts. We've got potential shakeups in e-commerce, car manufacturing costs.
And then SoFi being surprisingly upbeat. It's quite the spread.
It really is.
So today we're going to dive into the White House making claims about Amazon maybe showing tariff costs, which Amazon then kind of pushed back on, at least for the main site.
Yeah, though that haul service complicates it a bit. We should probably get into that.
We will. And then shifting gears, the auto industry seems to be, well, stuck waiting for some tariff clarity.
Holding their breath, basically.
Yeah.
Which impacts their planning big time.
Totally. And then how does all this tariff talk affect big tech's earnings? Because the Q1 numbers look okay, but
the rest of the year is the big question, isn't it?
Yeah.
Tariffs could overshadow those Q1 results.
Exactly. And finally, yeah, SoFi. They seem to be seeing sunshine where others see clouds, even talking crypto again.
Quite a contrast. So where should we start? That White House versus Amazon spat.
Let's do it. So the White House basically said, look, Amazon's planning to show customers exactly what tariffs are costing them on products.
Like a little line item at checkout, maybe. Here's the tariff cost.
Something like that, yeah.
Yeah.
A transparency thing. But Amazon came back pretty quickly and said, nope, not on Amazon.com anyway.
But they did mention this other service, Haul.
Right. Which sounds like their competitor to, you know, Temu or Shein, ultra low-cost stuff.
And there, they admitted they were considering showing tariff costs.
Apparently so, yeah. Especially because those duty exemptions for, like, direct small shipments from China are ending, so it makes sense there.
Okay, so a bit nuanced. Not a flat denial across the board, but definitely a denial for the main retail platform.
Exactly. But the White House reaction to the denial was, well, strong.
Calling it a hostile and political attack? That's pretty pointed language.
It is. And then they kind of reached back into history, didn't they? Mentioning an old Reuters report from 2021.
Yeah, about Amazon and some links to a Chinese propaganda arm, suggesting maybe Amazon's too aligned with China. Seemed like an odd thing to bring up now.
Kind of came out of left field, Ray. Especially considering, you know, Amazon did try to build bridges with the last administration.
Oh, yeah, the donation to the inaugural committee, Bezos meeting with Trump, stuff like that.
So, given all that, their current silence on tariffs, or at least CEO Andy Jassy being kind of vague about it, it's noticeable.
Like they're trying to walk a very fine line here.
Probably. And you got to remember how Amazon works inventory-wise. It's not just one thing.
Right. They buy in bulk themselves like a traditional retailer, import goods directly.
But they also have the huge marketplace, millions of third-party sellers.
And that's where it gets interesting with that April report about them canceling some inventory orders from China.
Exactly. If they cancel their direct orders, who picks up the tariff slack if those goods still end up on the site?
Potentially the third-party vendors, right?
Yeah.
Amazon effectively shifts the exposure.
Could be. And sometimes Amazon even helps those sellers with importing, like consolidating shipments. So they're deeply involved either way.
So maybe it's a strategic move to insulate themselves a bit from the direct tariff hit. Plausible?
Seems like it. Okay, let's shift over to the car companies. They sound pretty stressed.
Yeah, the auto sector is definitely feeling the heat from potential tariff changes. It's complex for them.
So there's talk maybe tariffs on auto parts might ease up a bit.
That's the hope, but the details are fuzzy. And calculating tariffs on, the non-U.S. bits inside a car, even one built under USMCA rules, it's messy.
And then there's the stacking problem you mentioned.
Right, that's the big worry. Imagine you import steel with a tariff, then you make a part out of that steel, maybe in Mexico, and import the finished part.
And it gets hit with another tariff, like a double dip.
Exactly.
Yeah.
A tariff on the material and then another on the component made from it. They really want that eliminated.
Makes sense. But the lack of detail overall is the killer right now.
Absolutely. Look at GM. They actually suspended their financial guidance. They just can't forecast accurately without knowing the rules.
Wow. So they need the specifics on parts tariffs, finished vehicle tariffs, especially for cars coming from, say, Canada, Mexico, Korea.
Yeah, where a lot of their entry-level models come from.
Yeah.
The administration says they want to give domestic bakers a break, but what does that mean for parts sourced globally? That's the gray area.
Okay, so the auto industry is kind of stuck in neutral, waiting for the green light on tariff details.
Pretty much. Which brings us to big tech earnings. Q1 results are coming up.
Yeah, and expectations are actually pretty decent, right? Like 15% earnings growth for
Well,
Q1.
on paper, yeah, sounds good. But
But these potential electronics tariffs are just looming over everything.
totally, it's, like you said, good first inning, but the heavy hitters, the tariffs are stepping up to the plate for the rest of the game.
So what the CEOs say on the earnings calls, their guidance for the next few quarters, that's going to be way more important than the Q1 number itself.
Way more important, investors are looking ahead. Do people maybe buy that new iPhone early because they feared a price hike?
Could be. Some pull forward in sales is definitely possible, and you hear companies talking more about supply chain shifts, like moving more production to India.
Trying to de-risk a bit.
Yeah.
So for us as consumers, where might we see tariff impacts first?
Probably electronics, yeah. And maybe apparel, toys, games, stuff that gets imported a lot and doesn't sit in warehouses forever.
Right, faster inventory turns mean price changes show up quicker, but how will people react if prices do go up?
That's the million-dollar question, isn't it? Do we just pay more or do we cut back? Big uncertainty there.
And if the tech giants are cagey, if they don't give clear guidance on how they'll handle it.
Well, markets hate uncertainty. We've already seen valuations for those Magnificent Seven stocks wobble a bit, could get choppier.
And we also need to watch the hyperscalers, right? The cloud giants like AWS, Google Cloud, Azure, they're spending their CapEx.
Oh, absolutely. Especially investments in AI and data centers. That's huge for future growth. But it's funny.
What's that?
The market's been a bit down on companies spending heavily lately, hasn't it? Unless you're like a utility or something.
Yeah, there's this question of when those big investments actually turn into bottom line profit. The market seems impatient for that earnings flow through right now.
Okay, so lots of uncertainty swirling around big tech and autos. But then there's SoFi. Quite a different story.
Yeah, definitely a contrarian vibe coming from them. Their Q1 2025 results look really strong.
Strong is right. Like 33% revenue growth year over year, $771 million. That's pretty impressive.
So what's driving that? Is it just their core lending?
A big piece is actually this loan platform business they've spun up. It's only about a year old.
Okay, what's that involve?
Basically, they underwrite loans, but then asset buyers purchase them, and SoFi gets fees. It's already doing billions in originations.
Ah, so it's a fee-generating machine for them.
Yeah.
Less capital-intensive, maybe.
Seems like it. And they think it could be a billion-dollar business itself soon. Plus, they plan to use it for loans they might have otherwise declined. Pretty clever.
Smart. And then there's the crypto angle reappearing?
Yeah. They hit a record 11 million members, so they've got the base. And they're talking stablecoins, maybe getting back into buy, sell, hold.
Didn't they have to stop that when they got their bank license?
They did. But apparently some recent regulatory interpretations, maybe related to the OCC and OCEX, have opened the door again, or so they seem to think.
Interesting. And it sounds like they want to go beyond just trading crypto.
Oh, yeah. They're talking about embedding blockchain and crypto into lending, spending, maybe even offering their tech platform to other banks for crypto services. Ambitious stuff.
It really is. But the CEO sounds so upbeat, even with consumer sentiment generally being kind of low.
Yeah.
How does he square that?
Well, he points to their customer base. They target higher earners, right? Average 150K household income, 750 FICO score.
So maybe more resilient to economic headwinds.
That's the argument. And he claims they're actually stealing market share from the big traditional banks. So it's secular growth, not just riding an economic wave.
And their loan performance backs that up.
Apparently so. Improving delinquencies, lower charge-offs, strong debit spending. It paints a healthy picture of their specific customer segment.
Which explains why they raised their guidance for the full year and Q2 beating expectations.
Exactly. They feel they're in a strong spot, so they're gonna, quote, step on the gas with new products and innovation.
Like that SoFi Plus subscription they rolled out.
Yeah, that's a good example. Apparently it got high adoption quickly among existing members and gets people using more of their different products.
So they see themselves as having momentum, even seeing positive signs on the regulatory front for fintech and crypto.
Seems that way. The CEO mentioned seeing a potentially more favorable landscape emerging, which could let them do more, like crypto-backed loans or using stablecoins for payments.
Wow. So while parts of the tech world are bracing for tariff impacts, SoFi is looking at crypto expansion and feeling pretty confident. Quite the divergence.
It really is. Shows how different segments within tech and finance can have vastly different outlooks right now. Quite a tour through the landscape this week.
From global trade jitters to fintech optimism. Definitely covered a lot of ground. It never stands still, does it?
Never a dull moment. Okay, well, that about wraps up our deep dive for today.
Always interesting to connect the dots.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed this deep dive, please do like, comment, share, and subscribe for more fun tech discussions.
See you next time.